Hello and welcome to the Market Forge. This is where we track the infrastructure of the future economy, from crypto and AI to energy, automation, and beyond, and translate it into clear market positioning. Every week we break down liquidity, capital flows, and the signals that matter so you can understand not just what's happening, but what's coming next. Before we get into the show, I do like to remind you this is not financial advice. I'm a financial advisor. I'll put a link in the description below if you want to learn more about my services. But let's go ahead and get into the Market Forge radar. Look, kind of my overall look into this right now is that the market feels like it's in a transition broadening out phase. The crypto and mostly crypto has looked really rough. We've had mass liquidations across the board. NASDAQ has been downtrending for a few months now. But overall, AI infrastructure continues to hold its structure, and the energy and physical infrastructure also looks solid. The speculative infrastructure like quantum and automation are still going through some correcting, but it's not collapsing. It looks like it might have an opportunity to broaden. Like this is important because markets don't reverse when everything looks strong. They reverse when the selling pressure stops accelerating. And that's where we're at. Stabilization, not expansion yet. And I want to show you that in the charts. So we open it up with USDT dominance. This is where I start. And I do that because this is essentially telling you where crypto liquidity is, if it's going into stable coins or if it's going into crypto infrastructure, altcoins or Bitcoin. So we had an aggressive move to the upside down here. It's about 5.7%, and we got all the way up to 9 even. That's a huge move, and that was really where you saw these huge cascading liquidations going across all of crypto. Basically, it was brutal. If you were in it, we feel your pain. I feel your pain. But it looks to be at this point that it's looking to slow down. Now, this is still a bullish pattern. If it continues to consolidate at these highs, that's not good, and that tells us that crypto is not quite ready to, go into a bull phase. It's going to continue to stay in more of a bear phase. This is the weakest aspect, I would say, of kind of the future infrastructure that I like to talk about, that I like to pay attention to. But with that said, this could end up being just like a rounded dead cat bounce. I mean, ultimately, I wanted it to get up to this box, but this could be it, or you could see one impulse move back up. But if it gets up here and it doesn't hold, then that's going to be pretty bullish for the crypto infrastructure. But this is by far the weakest segment in sort of the future tech, the rails, AI rails. So Bitcoin dominance, same position. Oh, that's wrong. That's not what we want to look at. Nope, we don't want to look at Bitcoin dominance. We want to look at the Dixie. Sorry about that. So the Dixie is going to be basically the same idea behind USDT dominance, but it's the strength of the dollar compared to other currencies. And it has looked weak for some time now. I mean, you can see here it's basically just been coming straight down since January 2025. So pretty much a full year. Now you're starting to see some consolidation at this trend line. Now I won't go all the way back, but this is a long-standing trend line that has been there for decades. And what you can see here, if my lines are accurate, then we're kind of trying to hang out around this trend line. If we can stay below, well, heck, if we can stay below this liquidity pocket, then there's a possibility that this bullishness continues into 2026. And this is what we're going to be watching very, very closely. You see it had an impulse move back up, but it wasn't able to get back to this point. Now, if you look at lower time frames, it suggests that we might be into some bullish posturing. This is a higher low, so the trend could be reversing. This is going to be a close one to keep an eye on because that's going to tell us, is sentiment going to be bullish or bearish? Because typically when the Dixie's going up, assets are going down. So that's why we watch that one so closely. So right now, liquidity looks a little bit uncertain. Now, keep in mind, we just got out of quantitative tightening uh, from the Fed perspective. So December 1st is when we ended quantitative tightening. So historically speaking, you end up in a neutral state for some time period, and then usually it will lead to some sort of expansionary market or business expansion, uh, accelerated business cycle, those sorts of things. So we got to watch that closely. But as of right now, it's hard to tell. We're trading a bit sideways, and we don't know which direction this is going to go. Now we look at Bitcoin. Again, we talked about USDT dominance, and you see that cascading sell just aggressive. I mean, you couldn't get back to any of the previous all-time highs. I mean, in some cases, you couldn't even get close to it, and the selling just absolutely kept going. There was a lot of theories as to what exactly caused this. There's some talk about there was a fund in Hong Kong, I think, that held a bunch of IBIT, and they ended up getting toasted on the 1010 liquidity plunge in crypto, and that could be the case. They could be a reason why all this happened. It would explain a lot, but we have to look to the charts. We have to look to liquidity, and we have to look, at the technicals to have an idea of maybe what's going on here. So we've had a nice bullish impulse to the upside. We have had a higher low here on the daily. That's usually a pretty good sign, but we're still below the month to date VWAP. It's certainly trying to push up. We've had some good price action this weekend. We've had some good price action on Friday. But if we can't get above this VWAP, this monthly VWAP, then we could be looking at more downside potential. This is not a market that I'm aggressively trying to allocate to. This is a wait and see stance from me to see how this all turns out. And you don't need to rush. You'll always have time to confirm that the bullish transition or the bearish transition is taking place. Here, total crypto market cap doesn't look a whole lot different than Bitcoin. The sell-off looks just as aggressive. Our liquidity position is at the exact same point. Down here is a pretty big liquidity pocket from previous years. So we could see it hang around in here for a little while. It wouldn't surprise me if we, kind of came down and hung around in this zone for a bit and then ultimately decided which direction we were going to go. If we can close the daily above this monthly VWAP, that's going to look bullish for our altcoins. Well, again, it's wait and see mode. NVIDIA. So NVIDIA is essentially been consolidating since July of 2025. It is moving in an upward consolidation, which is not always bullish. This could end up being a bear flag where, it kind of makes its way up and it's grinding higher, but ultimately ends up failing when it does, kind of finish its move. And I had a false breakout here, did not hold, came back down. That is not bullish. That does not particularly look good. Your momentum wave certainly suggests that this thing wants to come down. It wouldn't be out of the question, and it's not necessarily bearish if that happens. We could be looking at breadth or broadening of the market, which would just mean that investors are pulling profits on NVIDIA and rotating it into other assets. But for right now, the overall NVIDIA story looks to be holding up, but it's one to watch. Like, you're going to hear a pretty consistent sentiment from me that this is a wait and see type of market. It feels like things are slowing down. There's a decent amount of fear in the market, but it's mixed. I mean, crypto is fear across the board, but the rest of the indices, are kind of back and forth. Our small caps look good, but then our large caps don't look great. So it's hard to say. So that's why I'm in a wait and see mode, and I'm just analyzing and looking for the right opportunity to start figuring out or to start allocating to this market. The semiconductors, they do look strong. We had a short consolidation here. We broke out of our consolidation only to essentially test that breakout and then continue higher. My only concern is that our momentum waves do show some bearish momentum, that this might not hold. So we're going to watch to see what it does off the monthly VWAP, and then play it from there. Now, copper looks strong. The physical infrastructure, the physical energy and the aspects that go along with the AI and the future digital economy expansion looks good. It looks good to me. We might be looking at. It wouldn't surprise me. We might be looking at a potential parabola. We've got a couple of touch points here. Gold did it, silver did it. It's a precious metal. It's a well-known commodity. Tends to be, it has some interesting volatility both to the upside and to the downside. But this looks pretty bullish to me. The copper aspect of it, the physical aspect of the AI integration and the digital revolution seems to be looking pretty solid. Now, if we take a look at kind of the nuclear aspect of it, because I do believe that nuclear is going to play a big role in the integration of AI and really what the future economy looks like, because we need that power. And there's a lot of suggestions that some of that power is going to have to come from nuclear. The US is investing in it. China's been investing in it for a long time. And I will say, this chart does look bullish to me. It's been in this channel forever, basically. And it continues to rise to the upside. What I really like about this is we came to that channel, we got to our monthly VWAP, and then it went ahead and pulled ahead and found support there, and you had a nice bump in volume. Your volume is trending up. So this actually looks appealing to me. So the energy aspect of the trade looks strong to me. Looks very strong to me. The uranium miners, look, we consolidated for what? I'll even give you 2021, August 2021. We've been consolidating in this space for a really long time. Not unusual for miners. Miners tend to consolidate for long periods of time, just like the metals that they mine. Gold, silver, uranium tend to consolidate for long periods of time, and then they explode aggressively. And this is the perfect setup. You had it consolidating, broke out here, retested twice, and then boom, exploded to the upside. Looks really good. Uranium miners are looking pretty strong. Then we're going to look, now we want to look at the robotics aspect of it. Okay, so this is the robotics ETF that I'm tracking to get in a general idea of where we are from a robotics standpoint. And this one's a little mixed to me. We're coming right back into or close to previous all-time highs that we haven't seen since 2021. It's been grinding its way back up here, and now we're at this consolidation point. If it continues to consolidate here and then just keeps tapping away at here, would not be surprised if we break out past all-time highs and then explode higher. So robotics actually looks pretty strong to me from here. Volume looks okay. Momentum waves look strong. And then I love it when they consolidate under previous all-time highs. That tends to look pretty bullish to me. Now we want to look at the QQQs or the NASDAQ, just to give us a general overview of how the tech sector looks. And I kind of mentioned this a little bit earlier, but it's basically been in a downtrend since October last year. You had a little push to the upside, did not hold, and in the last couple of weeks have looked pretty bearish. I mean, we can actually even move this right here. This is our previous liquidity pocket. We got to get back up here before we even look remotely bullish. I mean, we still, we got to get above here, and the trend line's right there. So that's going to be a make or break. So again, that's why, I'm just observing right now. This is not a market that I would be aggressively allocating to in any way. And as a reminder, again, this is not financial advice. We're simply observing the market and understanding if this sector looks bullish right now or bearish, or we're just kind of neutral and we're waiting to see where it's going to move and if it will give us some direction. And the last thing I wanted to bring on is quantum. So I want to cover all these sectors on a week by week basis because I believe that this is really the future infrastructure of where we're headed. If you go back to the Industrial Revolution, the people that were able to identify where markets were moving, where the acceleration was taking place, where the business expansion was taking place, those people tended to do very, very well. And that's my intent here, is to zone in on this area because I do believe that this is where the future is headed. AI, automation, robotics, crypto rails, specifically for AI automation and AI bots, nuclear energy in general, precious metals infrastructure, and quantum computing. So here's where quantum computing comes in, looking kind of rough. Really, you could almost argue that you basically consolidated here. You had a breakout here, but it didn't hold, didn't stay together, and then you had a pretty aggressive sell-off here since the beginning of the year. So you're below the monthly VWAP here. You're below all these moving averages or volume weighted averages. Not usually a good sign. So we got to reclaim this area. We got to get back up here before anything looks good. So quantum looks rough. Quantum looks rough. We're years out from quantum, so it's going to be further out on the risk scale for most investors. So yeah, basically, this is a phase where patience is going to be your advantage. There is a time where sitting on your hands is the right move. Okay, not because opportunity isn't coming; it's coming, but because opportunity tends to emerge quietly before it becomes obvious. So, right, look, the objective isn't speed. It's not to chase. It's to be aware. We're watching liquidity. We're watching structure and allowing the signals to confirm our next phase. So the future economy is being built in real time. And most people won't recognize it until the opportunity is gone. And I don't want to be there. And I know you don't want to be there. So like each week we track the signals that matter so you can stay ahead of the curve and position with clarity. Subscribe so you don't miss the next Market Forge radar. Until then, stay patient, stay observant, and stay ahead of consensus.